Good morning, traders. It's the 25th of April. I'm Joe Neighbour from Signal Centre. A bit of a delay this morning to us guys. Got a few bits and pieces going on. Steve should be along shortly. But in the meantime, I'll crack on with the latest headlines. And here he is, just in time. Hello, Steve.
Hello.
Just in time. So just about to go through the headlines and we'll get stuck into some charts. So let's bring those up. Slight increase yesterday in German business confidence. The IFO business number strengthened to 93.6 for April from a revised 93.2 the previous month, but this was slightly below the consensus forecasts. The IFO remained cautious over the outlook, with the economy still lacking momentum despite an increase in export expectations. The Bundesbank are optimistic over industry. In its latest monthly report, they stated that there had been a rebound in industrial production and that the economy is likely to have expanded in the first quarter of 2023 compared with previous expectations. It added there had been a further boost to activity due to a surge in industrial orders. The bank added that unemployment is likely to fall slightly over the next few months, but consumption will still be hampered by high inflation. With regards to the ECB, the council member Schnabel stated that a 50 basis point hike was still on the table for the May meeting. Consensus forecasts currently are for a 25 basis point rate hike, but markets expect an overall hawkish stance over the next few months. The dollar continued to drift lower yesterday with no major US developments. The dollar drifted lower with the currency at a one-week low, although it held firm against commodity currencies. The Bank of Japan stays dovish. In testimony to Parliament, the Bank of Japan Governor Ueda stated that it was appropriate to maintain a loose monetary policy. Markets, however, were still wary over a potential adjustment to the yield curve control program at this week's policy meeting. We've got Australian inflation data, which is due out overnight, so that'll be well watched. Consensus forecasts are for a quarterly increase of 1.3% from 1.9% previously, with the year-on-year rate slowing to 6.6% from 6.8%. And also we've got a Swedish Riksbank decision due tomorrow as well, expecting another 50 basis point hike. Okay, so let's take a look at some charts. As always, while we're going through these, if there are any requests, please feel free to post them up and we will do our best to cover them. Steve's going to kick us off here with a look at Bitcoin.
Hi all. Yeah, with Bitcoin, it has had a little stall in the sell-off. Yesterday we posted a doji candle. The low of yesterday just below the 27,000 mark, and just trading above there now, 27,400. So we have stalled at this major level of resistance, this band of resistance that we have between 29,000 and 32,000, and reversed lower, forming a little bit maybe of a bearish flag, but if it or we could be posting just a higher low here. So dollar has weakened slightly. It lends a little bit of support to Bitcoin as it's priced in dollars. Levels to watch on the short-term chart, really looking at the 4-hour charts, this little band between 27,000 and 28,000, really looking for a break of there. Short-term bias is to the downside, so looking to sort of sell into rallies in front of 28,000. We do manage to break above there. We've got the Ichimoku cloud, which looks a little bit ominous at the moment. That is offering resistance all the way up to 28,775. Ethereum, same sort of price action, got down to 1808 yesterday, and a resistance currently 1888. And we have the similar sort of cloud, short-term bearish price action, and looking pretty weak at the moment. So a break really either of those, that support or resistance, should further extend to the downside if we do break the support, and hopefully, well, potentially we've got this swing low back on the 9th of April that could provide a little bit of a reason to set longs around here, but be very tight with your stop. XRP, again, same sort of price action, broke down, got down to 44 cents, resistance coming in now around the cloud, and the spike high that we got yesterday, yesterday morning at 1 o'clock. That is at 48.5. So that's the sorry, just like end that. That's the resistance level we can see here. Looking at commodities now, we've seen gold rally. That has support's been provided by the dollar weakness. Just bear with me 1 second.
The bat phone going there, Steve.
Sorry, kid's not up. So we got the gold bouncing off the support. 1969 was the initial spike lower. That was on the 19th. Then on the 21st, we got down to 1972 and 1974 on Monday. So we have found a nice little bit of resistance in front of this 1970 level. Price action overnight has stalled and reversed a little bit lower after the spike high yesterday up to that $2,000 level. That's obviously a quite a psychological level of resistance. Remember, we're not far away from the all-time highs coming in at 2075, and the recent swing high was 2050. So levels to watch there. Ichimoku cloud providing resistance all the way up to 2010. Yeah, a little bit sideways. Still feels overall a bit toppy, but I'd be very wary if this dollar does have a further slide to the downside. We should get some momentum coming in there to the upside in gold. Crude oil also has had a decent recovery since the start of the week. We formed a bullish outside candle on this 4-hour candle Monday morning, and since then we've extended higher, broken through the resistance at 78.30, and now forming a little bit of a bullish flag with potential for further upside. Again, dollar being a key driver there. OPEC plus nations obviously more recently have talked about cutting production, which has led to higher prices. We still haven't filled this gap going all the way back to the 31st of March. So we thought we'd get that filled there. Did we get it on Brent crude oil? Not quite. It was we only left a little bit of a small gap, 79.86 all the way up to 80.21. So we did leave like a half a dollar gap there. That's formed a double bottom on oil Brent crude oil, and the measured move target for that would be somewhere around 83.40. So still a bit of further upside there. It seems like we've just had this rally higher, going a little bit sideways, ready for the next wave of bullish energy. Natural gas seems to have formed a bottom around just in front of this $2 level, and we've broken up through resistance at 232 and been up to 250. Had the sell-off again. This was last Thursday. Got down to 228 and bounced from there. So again, that's looking pretty comfortable above and short from a short-term perspective. A nice, slightly bullish trend coming into natural gas. So that's where we are with the commodities. Let's take a look at FX and then maybe take a look at a couple of indices after.
Okay, lovely. Thank you, Steve. Let's take a look at dollar index then to start with. So as we know from the headlines, dollar drifted lower over the past 24 hours. We talked about this wedge forming last week, which never really materialized. We were ultimately looking for a break of 102.23, which didn't happen. So yesterday we posted a pretty negative candle back into this zone of support here between 100.82 to 101.29. So we're in that range at the minute. It's finding some support for the time being. It does actually look like the dollar gap lower yesterday or overnight, so that indicates further weakness, but it is on the front foot today, benefiting from the fact that it appears to be a bit of a risk-off tone to the markets, and we'll see that in a moment when we look at the indices. So for now, overall trend remains bearish. Potential that it is forming some sort of bottom here on the dollar index, but it's a long way off yet. Only a potential. The price action still looks bearish, and unless we can break convincingly out of this wedge, it looks so we may challenge these previous lows down at 100.82. Okay, let's take a look at Euro US dollar. So we can see that prices are now attempting to break through this previous resistance, these previous highs that we posted back in February. That comes in at 1.1032. We saw an attempt to try and break through this last week, but failed. So it was 2 weeks ago, and then prices dipped back lower, but we've retested that level again yesterday. We closed above that 1.1032 level, but today we are potentially stalling a little bit at that previous swing high at 110.75. So potential for a bit of a pullback here within this bullish channel. Any pullbacks could be limited to this kind of region here, potentially an even deeper correction down to the lower end of the bullish channel. But for now, it still looks pretty bullish, but we are at some heady heights here. So there is room for maybe a bit of profit taking or a bit of consolidation in the short term. Let's take a look at cable. Similar situation. We tried to break through these major resistance levels. In fact, we did do that a couple of weeks back, and that's at 124.30. We then made new highs here on the 14th of April, and those remain unchallenged, and we're looking to maybe run into that level again. Short term, we can see that prices are trapped within a bit of a range here, very, very narrow and tight range. A break to the upside would indicate a continuation higher towards 126.60, a break lower, and we may see prices pull back to around 121.64. So really just waiting for that break of this short-term range to dictate the short-term direction. Overall, price action looks pretty bullish. We can see from these lows that we posted as a result of that disastrous UK budget, prices are trending higher, and there was a major resistance here which has been broken, although we're yet to see any real follow through to the upside. Let's take a look at some of these commodity currencies then. Let's take a look at Aussie US dollar. So despite the weakness that we're seeing in the dollar, this is failing to move to the upside and is under pressure for the time being. We can see major resistance here at 67.93. Prices continue to rally into that level and be rejected. We've got a major area of support here which we continue to target. So ultimately still looks like there is potential for more downside here in the commodity currencies. Is it the same situation in New Zealand dollar? Yes, it is. So following the break of this wedge here, prices remain under pressure. We're into a 38.2% fib level in the short term, but it looks as though this is still under pressure and prices may continue lower in the short to medium term. Potentially a double top here that formed. The measured move of that comes in at 58.68. Okay, onto the request. There is only one so far I can see this morning, and that was on sterling yen. Now, we've just seen overnight that there has been some commentary from the Bank of Japan, and they continue to pump this dovish message, talking that they're going to maintain loose monetary policy. This is quite interesting. We did see a break of the downtrend, and that triggered further gains to the upside. We highlighted this resistance level last week at 167.61, and that continues to prevent further upside in the short term. So we can see today there's been an attempt at trying to move through that level, and in fact we've run into these highs that we posted on Wednesday last week at 167.97. So that really is capping the upside in the short term, and we've posted a bit of an intraday reversal on that. Long way to go on the session, but while this level continues to act as resistance, there may be further profit taking or potential for a reversal. Above this level, we've got another couple of resistance levels to consider, a 78.6% fib level, and these previous swing highs here, which come in between 168.53 to 169.09. Actually sticking with the theme of yen currencies, I looked at euro yen this morning, and this is a potential candidate today for my gun to the head trade. So ultimately, this has been trading in a really nice bullish uptrend for some time now. We can see here that euro has been outpacing the yen for a significant period of time. But if we look at more recent price action, these highs that we posted back in October last year are getting a retest this morning, and we've actually poked our head above that level ever so slightly and seen an initial rejection. So are we going to trade within a range here for a period of time? We can see these two lows down here at 137.36. Yes, the overall trend remains bullish, but if there's room for a correction here and this is going to form some sort of range bound trading conditions, then from a risk reward perspective, this looks pretty interesting indeed. So maybe something to consider here for a short-term trade on euro yen. I'll leave it there. Steve, you can run us through some indices and see if we can confirm that kind of risk off move that maybe we are beginning to see in some of these other currencies and commodities.
Thanks, Joe. Yeah, I'm going to take a look at indices now, and we're seeing FTSE breaking down as we speak. And I went for this on the gone-to-head trade yesterday and got stopped out, so I'm a little bit angry, but I might even go with it again today. Let's take a look at the daily chart. The daily chart looks to have formed a bit of a top, and we are breaking down through the support as we see here. Let's look at the 4-hour charts a little bit clearer. So support coming in, we're actually at it right now, 78.70. So selling a break of a close below there on the 4-hour chart or hourly chart it would be a good risk reward trade because there's plenty of scope to the downside. DAX seems to have been a bit slower to react, but it's still sort of like forming that potential double top formation. We'd need a break of 15,700 though to really signify that confirm that double top formation. That would be a break of the cloud as well. Definitely an interesting one. And the EU 50, that's a nice one to get on because we can get lots of those on the account we've got, which is a £2,000 account. Or was. That's again looking like it's breaking down lower. Two options here. You sort of like go with the support and buy into the support with a tight stop, or just go for it as it breaks through and closes below. Gun to head trade ideas doesn't have that luxury. We just have to hit it while it's live on air. Dow, similar sort of price action, formed that little bit of a top evening doji star formation and reversing lower. Nasdaq also under a bit of pressure, support coming in at 12,892 and the major support at 12,830. And S&Ps, you can see we sort of like had that spike high yesterday. If we redraw the resistance line here, you can see that the cloud and the most recent swing high, the one we got on Monday, 41.44 is probably the level to watch on the upside. On the downside, that 4,114 is the level to break. Really opens up the upside, the downside then all the way down to 4,070. Yep, that's about it, Joe. We can take a look gun to head and start making some money, mate.
Yeah, let's try. So let's have a quick review yesterday's trade. Did you post yesterday's? You did. I think
did.
It was S&P that you did.
Yeah, I did. You
rather
didn't.
than FTSE. No, I wasn't here yesterday.
Yeah, that's right. Yeah.
So
Any excuse.
S&P, yeah, S&P. Well, I can't lose any money if I don't trade. So S&P 500, Steve trade yesterday. Pretty choppy stuff out there at the minute, which is an issue for us because unless we can get kind of stable-ish kind of conditions or we can see some technical patterns play out and they're working, then it's going to be a struggle for us to turn a profit, and that'll be the case for everybody that's trading at the minute. So anyway, we've got to pick some new trades today. I've already kind of indicated where I want to go with this, and it is euro yen based on this daily setup that we have. So long-term uptrend, but we've stalled into this resistance from October the 21st last year, poked ahead a little bit above that, but rejecting that level now. Looking at the intraday, we can see on the hourly, really aggressive bearish candle just been formed. Well, in the process of forming. We've still got 37 minutes for that to confirm. So I don't have the luxury of waiting for the candle to finish. So I'm just going to go with it here. I'd like to sell it at market, Steve, with a stop just above the high. That's at 148.66, the stop.
Yeah.
And my target is 146.41. I'm just trying to scrape a 2-to-1 here.
You're in, mate.
If I was afforded the luxury of time, I would be looking to sell a bit of a retest to the low of the previous candle at 148.19 which would improve my risk reward quite dramatically, taking it to around about 3.6 to 1. So if you do want to follow that, or that's something that you're interested in, maybe wait for the confirmation of the candle to close. As mentioned, I don't have the luxury, so I'm just going to get this on now, and we'll see what happens. Over to you, Steve.
Yeah, again, slightly annoying. We've got this. Well, I've just got to go with it, haven't I? Yeah, I'd rather sell up this trend line here, 41.40. If I have the stop above there, my risk reward dips below 2, so I can't do that. I have to have it around below. Let's get it up to here. This is the levels I'm really looking at. So 2.25, that's my overall average. So let's sell that, take that, 1%, 1%, and put the stop in 41.35, and the target 95.5. What's that give us? That'll do for me, Donkey. I'm going to go for that. You're getting short here. The stop is at 41.35.6. Ideally, it would be higher, and targeting a move to 40.95.5. I'll get that posted up.
Okay, lovely. I'm doing the same. So I forgot to actually run through the rules of the guns of the head trade. So it's quite simple. We both pick a trade. We're doing it with a live account. We risk 1% of trading capital each, and we must have risk reward ratios better than 2 to 1 in order to get these on. Now, the idea is we'll close out at 9 p.m. UK time. We just automatically cut them out. We don't want to carry any overnight risk, and obviously want to keep track of how these trades are performing. So there's the rules for you. In terms of what we can expect from the day ahead, we've got US consumer confidence today. That's at 3 o'clock. And then overnight, we've got Australian consumer prices. That's the latest read on inflation. As mentioned, we are expecting that to drop. And then on Thursday, we've got the US GDP. That's going to be the big number this week that everybody's looking for. We've also got a hell of a lot of earnings going on at the minute. I think there was about a third or more of the S&P 500 reporting this week. So that could also impact the outlook for stocks. And on Friday, we've got the Bank of Japan policy decision. So another thing that we need to be aware of, obviously, there's already some commentary coming out ahead of that, stating that monetary policy is likely to remain loose for now, and waiting for adjustments over the yield curve control program later on this week as well. So that's it from us, Steve. Let's wrap it up there. I hope everybody enjoyed that and got some value from it. Again, feel free to get involved in the stream, guys. Post up markets that you're looking at, and we'll do our best to cover them and give you some opinion. So until tomorrow, hope everybody has a great day.
Cheers.
Bye-bye.